Hey guys, and welcome to another episode of Working Money, getting your money working for you. Now, I just wanted to take a quick sec to remind you guys, please subscribe to the channel if you haven't already. Click that little bell for new video notifications. And like the videos if you guys like the content I'm providing. And always comment on the videos. I love hearing what you guys have to say. So guys, the market's gone lower today. Here's the cryptocurrency market on CoinMarketCap. As you can see, everything's taken a bit of a dive. And, you know, it always brings us to the question of, I'm sure a lot of you guys are thinking in your head, you know, is cryptocurrency really going to be, you know, the thing that catapults my life? Am I making a stupid decision? You know, there's friends and family are making fun of me. They don't have any faith in the decisions I'm making. And is this ridiculous? Should I just get out? You know, whether you're in XRP or any coin, it doesn't really matter. Basically, cryptocurrency is taking a dive. And, you know, maybe you're losing faith. Well, guys, stick with it. I would say don't bail on your cryptocurrency position, okay? There was a tweet that XRP_Canada sent me, and it was from XRP Raven. And he linked to this article here, and I'm going to read this article. I believe Alex Cobb talked about this article briefly yesterday on his live stream. Nevertheless, I'm going to go through this article, and it's basically talking about the great crypto conspiracy of 2018. I'm going to talk about this article, and we're going to look a little deeper and talk about what these heavyweights are doing and how they're manipulating the market. So bear with me, guys. I'm gonna read through most of the article, okay? So Nick's notes, Bitcoin critics such as George Soros, JP Morgan, and Goldman Sachs have called Bitcoin a fraud, a bubble, and a Ponzi scheme. Yet they've begun investing millions in cryptocurrencies. So that's, first off, super interesting, right? In today's essay, world-renowned crypto expert Tika Tiwari reveals the reasons they've talked down cryptos. Okay. So if you're offended by sex, violence, so they begin with a little bit of a story comparing this to Deadwood, the HBO series. So let me just, if you guys haven't seen Deadwood, I haven't seen Deadwood personally, but let's just go through this. If you're offended by sex, violence, and salty language, then you should skip this article. Deadwood was an acclaimed Western series that ran on HBO from 2004 to 2006. The series was set in the town of Deadwood, South Dakota during the Black Hills Gold Rush of the late 1870s. So as you can imagine, the show was full of shootouts, filthy language, and quite a few sex scenes. Certainly not a show you'd want to watch with your kids. But there is an episode of Deadwood that holds a valuable lesson to crypto investors. During the Dakota Gold Rush, regular folks who got in early made fortunes. These weren't mining magnates or industrialists. Much like today's crypto investors, they were savvy speculators pouncing on an opportunity. So what happened to those early age prospectors? In the fictionalized Deadwood version, wealthy miner George Hearst, father of publishing magnate William Randolph Hearst, swindled them out of their mining shares. This wasn't too far from the truth. According to rumors at the time, Hearst used murder, intimidation, and misinformation to force people to sell their claims. He even purchased newspapers in the town to influence public opinion. And guys, as we can see, purchasing newspapers in the town in the 1870s is similar to what these big heavyweights, George Soros, the Warren Buffetts, the big financial institutions are doing, the hedge funds, what they're doing today using social media and, CNBC and all these media conglomerates to basically spread the same kind of information that they're talking about here, okay? Crypto investors will recognize the strategy Hearst used. In a bid to buy cheap, Hearst's agents started to float rumors that the government would seize all the land in the town. Prospectors believed the rumors and sold their mining shares for pennies to Hearst's agents. Okay. And the conspiracy worked. Hearst and his partners bought the biggest mine in the region, Homestake, for a bargain basement price of $70,000, $1.7 million in today's dollar value. Homestake would be the richest gold mine in U.S. history from 1879 to 2002. The mine produced 44 million ounces of gold and 9 million ounces of silver. At today's prices, that's a combined $56.5 billion in precious metals. So I'm seeing a similar heist play out in today's crypto markets. So who's behind the conspiracy? Every day we hear in the press how the Securities and Exchange Commission is cracking down on cryptocurrencies. And guys, as we know, the SEC has been, talking about cracking down, and of course they've declared that Bitcoin and Ethereum are not securities, but there's still some rumors running around about XRP. But, you know, they're in the spotlight right now, and, you know, there's a lot of uncertainty rolling around the crypto community, but this is exactly what we're talking about here. We hear that the Commodities Futures Trading Commission is starting new investigations. We hear JP Morgan CEO saying he'll fire any of his employees buying cryptos. Then we find out that his traders in London are buying with both hands. Exactly. We hear central banks float stories designed to scare and ward off crypto investors. In February 2018, the Polish central bank admitted to hiring a firm to spread a smear campaign against crypto. So these guys are even admitting that they're being super shady, okay? Spreading a smear campaign. And do you remember IMF head Christine Lagarde saying central banks need to band together against cryptos? Friends, the great crypto conspiracy of 2018 is upon us. And guys, a lot of this is because we saw a huge bull run in 2017. A lot of the retail investors wanted to get in on this. And now, you know, central banks, hedge fund managers, big whales, Warren Buffett types, they all want to get in on the action. But obviously, they don't want to buy Bitcoin at 20,000 a coin, right? They want to suppress the price. So all year long, we've been under assault by rumors of central bank collusion against cryptos. Threats of bans, endless investigations, and a ceaseless drumbeat of negativity from the traditional press. And yet, amid the shower of negative news, careful observers will have noticed institutions are actually running into crypto investments. Today, I'm seeing banks, regulators, and the press drown the market in negative news. They're using the same old trick Hearst used to scare speculators so he could scoop up the homestake mines for pennies. And guess what? It's working. Institutions are getting the best prices on crypto since mid-2017. Okay, guys, and if you remember mid-2017, the price of crypto hadn't skyrocketed yet, okay? We didn't see those prices increase till late 2017. While the average investor is panic selling, big investors are buying, guys. And this is exactly to the point, okay? If we go here, you know, and this is just the XRP chart, but, you know, when big investors, when we're panic selling, so when the retail investors are panic selling, we see the trend do this, okay? And then big investors buy up in support levels, okay? So big investors are buying up. And so this is like a reverse psychology, right? They're spreading this news to make retail investors feel like, oh, this is a terrible investment, sell, 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 you know, you're gonna lose your money. So, you know, people who aren't savvy about the markets or who are, you know, immature when it comes to investing, and I'm not knocking them, it's just, they just don't know what they don't know. They're going to sell their investments, which leaves an opportunity for the big whales to buy up cryptocurrency. So let's go down here. Over the last 90 days, we've seen some of the biggest investors in the world flood into cryptos. Wall Street Investment Bank, Goldman Sachs, okay, Susquehanna, billionaire George Soros. Coinbase is now launched a crypto index fund for wealthy institutional investors, okay? Financial services, Wellington Capital, the Rockefeller family, guys. This is all very important to realize because, you know, we see on the one hand, while the market was up here, you know, Soros and Warren Buffett, Rockefellers, all these people were saying how crypto was a bubble, it's ridiculous, it's going to pop. And then what happens? Market collapses, and now we're seeing a lot of these guys, these same guys, buying up in support levels, okay? So every important lawyer I talk to in the investment space is overwhelmed with crypto questions from their institutional clients. This is another point here, okay? Lawyers are getting, questions from institutional clients. So that's just the latest evidence that institutions are trying to get into the market and not stay out of it, all right? And then this guy goes on to talk about, you know, he saw it in the dot-com boom, the housing crisis during 94, 95, when quote unquote dumb money was buying internet stocks, basically saying don't fall victim again. You know, this is basically what happens. You know, the rich don't get richer by making stupid decisions. And, you know, as we can see here, prices were plummeting, and this just gives a great opportunity for the big guys to buy up cheap. Guys, I'm really sorry, I didn't want to do this. YouTube's not letting me export videos longer than 15 minutes, and this video actually got a little longer than I wanted it to. So I'm going to cut it here for today. I'm going to post tomorrow's video. I'm going to post the second half of the video tomorrow. where we talk a little bit more about the zero-sum game. Anyways, please like the video if you like the content. Subscribe to the channel. I always love your comments. See you tomorrow, guys.